Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world, and well, sometimes it looks like they are decoding their own finances live on air. Today we are diving into Kodiak AI Incorporated's current report, an 8K filing. Now, this is not a regular quarterly or annual report filled with pages and pages of spreadsheets. Think of it more like a special bulletin, a heads up for investors about something significant that just happened. And for Kodiak AI, that something has to do with their warrants. Kodiak AI is a company involved in artificial intelligence, and like many tech companies, they use various financial instruments to raise money. One of these are warrants. Think of warrants as options to buy a company's stock at a set price in the future. They are often bundled with other investments. So why is this 8K notable? Well, Kodiak AI just made some major changes to the terms of their warrants. Specifically, they've adjusted both the price at which these warrants can be exercised and the price at which the company can redeem them. This is a big deal for anyone holding these warrants because it directly impacts their potential value and how they might be used. Let's break down what they've done. Normally, these warrants, which we see here, like the common stock and the redeemable warrants, could be traded on the Nasdaq. The report tells us about the common stock, and these redeemable warrants, each initially exercisable for one share of common stock at an exercise price of, let's say, a certain amount. Now, here is the kicker. On the 21st of October, Kodiak AI informed the holders of their warrants about some adjustments. These adjustments, which became effective after trading hours on the 20th of October, are quite significant. First, the exercise price for these warrants has been lowered from $11.5 per S-hair down to $9.28 per S-hair. Imagine you have a coupon to buy something and the store suddenly says, "Hey, we're making this coupon even better. You can buy it for less money now." That is what's happening here for the warrant holders. They can now buy Kodiak AI stock at a lower price. Second, there is also an adjustment to the redemption trigger price. This is the price at which Kodiak can force the warrant holders to redeem their warrants. That price has also been lowered from $18 down to $14.53 per S-hair, so not only is it cheaper for warrant holders to buy the stock, but the company also has less room to force them to cash in their warrants. Now, why did this happen? The report explains that these adjustments were triggered by a recent business combination. Kodiak AI, along with Kodiak Robotics and AC Crew Merger Sub, completed a business combination on the 24th of September. As part of this deal, the company issued preferred stock and more warrants. They did this to raise capital. The key here is that the stock was issued at a price below $9.2 per S-hair. And importantly, the average trading price of their common stock, which they call the market value, was also below $9.2. When these conditions are met, especially after a significant event like a business combination, the terms of existing warrants often get adjusted according to the original agreement. The filing mentions that the market value was calculated to be $8.07 per S-hair. This number is important because it's below that $9.2 threshold that triggered these adjustments. It looks like they are trying to make sure that their warrants remain attractive and valuable, even though the stock price has dipped below a certain point following their funding activities. Now, looking at the company's status, Kodiak AI is identifying itself as an emerging growth company. This means they are subject to fewer regulatory requirements compared to larger, more established companies. This often allows them more flexibility in how they report their financials and comply with certain rules, which can be a double-edged sword for investors who might want more detailed historical data. The report is signed by Don Burnett, who is the Chief Executive Officer. So this is an official communication from the top leadership of Kodiak AI. So what does this all mean for Kodiak AI and its investors? On one hand, lowering the exercise price and redemption trigger price for warrants can be seen as a proactive move. It suggests the company is trying to keep its equity instruments appealing by making it easier and potentially more profitable for warrant holders to exercise their options. The company could see an influx of cash if those warrants are exercised. This cash could be crucial for funding ongoing operations or future growth initiatives, especially for an AI company that likely requires significant investment. However, it also signals that the company's stock price has not performed as strongly as anticipated following the business combination and capital raise. The fact that the market value dipped below that critical $9.2 mark, triggering these adjustments, might be a red flag for some. It could indicate investor concerns about the company's future performance or the broader market conditions affecting tech stocks. From a Warren Buffett perspective, we always look at the underlying business. While these warrant adjustments are a financial maneuver, they don't tell us directly about Kodiak AI's core business. its competitive advantages in the AI space, or its ability to generate profits from its technology. We need to look at their broader financial health to truly understand the situation. However, this filing does give us insight into how they are managing their capital structure and communicating with their stakeholders during a potentially sensitive post-merger period. The risk here is that if the stock price does not recover and climb significantly above the new exercise price, many warrants might expire worthless, which would be good for the company's balance sheet in terms of reducing future dilution, but bad for the warrant holders who bought them expecting a higher return. Conversely, if the stock price soars, those lower exercise prices mean a quicker and more substantial influx of cash for Kodiak AI. The opportunity lies in this potential cash infusion and the continued engagement of investors through these adjusted terms. In conclusion, this 8K filing is a technical but important update for Kodiak AI. It reflects the intricate financial engineering that often accompanies mergers and capital raising activities. The adjustments to the warrants are a direct consequence of recent company events and market conditions, aiming to rebalance the incentives for warrant holders. For the company, it is a way to manage its financial obligations and potentially raise further capital efficiently. For investors, it's a signal that requires closer examination of the company's stock performance and future prospects. What are your thoughts on these warrant adjustments? Do you see them as a positive sign of proactive management or a hint of underlying financial pressures? Let us know in the comments below if you found this breakdown helpful. Please give this video a like and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our growing Discord community linked in the description for more discussions and to connect with fellow finance enthusiasts. Thanks for watching, and we'll see you in the next decoding session.